Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look into LIN stock today, focusing on its earnings per share and price to sales ratio, both currently and based on the guidance management has provided, which in this case will bring us to December 31st, 2023. Then we'll close by applying our findings to its current technical chart. Before we get started, please hit that like button and subscribe. There are chapters below if you want to skip ahead. And if you have any questions or notes, let me know in the comments. To begin, I have at the top LIN's current earnings per share for the trailing 12 months, totaling $12.09 per share. The quarterly earnings making up that figure is in the top right. Once this was calculated, I pulled the company's past earnings and PE ratio results, finding a few items, mainly how this company has seemingly evolved over time. During the period 2010 through 2018, it primarily traded with the earnings ratio of 16 to 20. Then around 2019, after its merger with Praxair, and through the present day, it elevated itself to a range of between 35 to 45 times earnings, which is what we are going to use in our case. With this range, we will multiply it by the current earnings per share to get a fair value range of 423 and 544. Thus, its current price of 410 appears to be a good deal. Moving to the company's current price to sales ratio, we have a similar setup to the previous slide with its current trailing 12-month sales at the top, totaling $32.45 billion, and the quarterly sales on the top right. We then pulled the company's current shares outstanding, 494 million shares, as of its last earnings report. We divide those two figures to arrive at a sales per share figure of $65.75. We'll come back to this figure shortly. Similar to the previous slide, I pulled the company's past sales and the price to sales ratio results, finding a reasonable range of between 4 and 6 times sales over the past 5 years, with an average of about 5 times sales. Also, similar to its earnings per share, its price to sales ratio has evolved, going from 3 to 4 to what we see now since the merger we mentioned earlier. Using our established range, we find a fair value range of between 263 and 394, resulting in the current price of 410 being slightly overvalued, which I realize is the complete opposite of what we said regarding its earnings. However, priority is going to be given to its earnings. Let's now look at the guidance. Looking at management's guidance, they have provided the following projection for its fourth quarter ending December 31st, 2023. Adjusted earnings per share between $3.38 and $3.48, resulting in a full year adjusted earnings per share between $14 and $14.10. We're going to split the fourth quarter projection in half for our projection and year-end forecast. By doing this and removing some of management's adjustments, we're able to estimate that the actual earnings per share will be approximately $12.50. This leads to the following assumptions. Year-end sales to be roughly $32.74 billion, shares staying constant at 494 million, and net income to be around $6.17 billion. Using these projections, we can project a fair value range between 438 and 563, again resulting in a current price of 410, remaining to be a good buy. Pivoting to its price to sales ratio based on management's guidance, we can see the shaded portion is the same as the previous slide, so I'm going to focus on the unshaded portion. Using management's guidance, we can calculate a future projection for sales per share of $66.34. Then multiplying this forward guidance by our reasonable price to sales range of 4 to 6 times sales, resulting in a fair value stock price between $265 and $398. The result being that the current price of $410 is at a good point to sell. However, as mentioned, due to the conflicting viewpoints and general misalignment, priority is going to be given to the earnings results. As a summary for our earnings per share calculations, at the top we see where it stands today, and on the bottom we have our forecast based on management's guidance for year-end 2023. As a summary for our price to sales calculations, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance for year-end 2023. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight areas where, to me, it makes sense to either add to this position in green or take profits in red. This image gives us a visual on the general misalignment between the two metrics, as the earnings buy point overlaps its sales sell point. Otherwise, we have noted that this stock is in an uptrend and has been in one since March 2016. This uptrend currently happens to split our two metrics and may be most suitable for actively trading this company. I will add, if we follow the earnings metric, which does have priority, we could see this company pop into the 500s this upcoming year, with continued success, of course. Let me know your opinions in the comments below. Thank you for watching. Please like and subscribe.